Welcome back. Mehrab Irani is joining me right now from Tata Investments Corporation. He's a fund manager, he's an author. As a fund manager, of course, he manages a portfolio worth about $1 billion or so. And of course, they're active in the bond market as well. Mehrab, pleasure to have you with us here. Thanks very much.
Thank you.
The big sort of talking point for the market in the very near term has been that maybe we are at the cusp. And when I say at the cusp, I mean on the 2nd of December, when the RBI meets, you'll see the beginning of rates actually being dropped. Is that justified, or you think the market is getting it wrong, the RBI wrong?
Yeah, good morning, Prashant. If you see, yes, there is a lot of expectations that the rate will be cut in the meeting which is coming on 2nd December. However, if you see what has happened over the past few weeks, actually the bond markets have already started discounting it. The 10-year GSEC has come down by almost 100 basis points. Currently, it's close to 8.15%. So the yield curve, which used to be like upward sloping, has become slightly flatter. Now, if you see the inflation, yesterday the inflation data also came down. It was around 5.5%. It has fallen by almost 100 basis points. So that is another positive. But I still feel that RBI may not just cut it on this next upcoming policy meeting, because I think they want to bring down the inflation expectations. And I think what they are doing is correct. So they may be a little more positive, but I don't think they will cut. On the macro side, I think other things are also looking positive. If you see the IIP numbers are very good yesterday, it was 2.5%. And the important thing is in spite of base effect, they still went up, and the manufacturing sector recorded very good numbers. Though there was some disappointment on the consumer durables side where it fell, but the manufacturing sector was positive. That is another good thing. Also, if you see for the overall markets, the second quarter earnings of most of the companies are out. And the top line growth has been close to 4.5%. The EBITDA growth has been around 7% with a 60 basis point drop in the EBITDA margin, while the bottom line growth has been on the lower side at around 8 to 9%. So the earnings have slightly disappointed for some companies and sectors, and what I feel is the expectation of analysts around 15% growth for 2015 may not be achievable. However, on the positive side, I think 15% plus growth would be achievable for 2016, and that's why on a forward basis, I think we are discounting today market at close to 15 times, which is within the long-term average. So the macro situation is looking good. The earnings, I think, will improve going forward, and the liquidity has been very good. I think over the past few weeks, FIs have pumped more than $3 billion into Indian equities, and now domestics have also become positive, and they have also started receiving good inflows. Plus, if you see the world over, some few weeks back, there used to be some scare of deflation in the developed markets. I think that scare has also now gone, and the world markets are also looking good. So overall, I think the situation is looking quite good, and going forward, I think investors will still do good by staying invested in the markets.
This point of domestic inflows, and we put out the numbers for the month of October, which is the last month for which AMFI has released data day before yesterday evening. About 6,000 crores is what equity mutual funds have received. 6-month number now is close to about 40,000 crores or so, which is quite good and reasonable in the context of what we've seen over the last couple of years. But do you think this is it's basically a one-step reset which has happened? So people going away from bonds into equities, away from real estate into equities. So it's like a shift which has happened. But do you think that it will sustain? For it to sustain, and people to put more money in, and the market to attract new investors, are the conditions conducive? I mean, that would require better job prospects, prospects that salaries will go up. We don't have that right now.
Yeah, Prashant, if you see, a lot of the correction has happened of the inflow which had not come over the past few years.
Yes.
If you see past few years, a lot of the retail money was going into, say, gold, it was going into real estate. However, if you see and also into bonds, but what has happened over the past few months is that the real estate prices have started stagnating. Even they have corrected in some tier 2 cities. Even the gold prices actually now going nowhere. They have actually corrected even in Indian rupee terms. And the equity markets have started performing well. The overall outlook is looking good. After the new government has come out, they have also announcing a lot of positive measures. So, overall the environment has started improving. So just now whatever inflow we have received it is just the correction of what was not received over the past few years. And the real inflow will start coming once the economy performs well, once as you said, the job market improves. And I think still this is just to catch up. I think this is just the beginning, and over next few quarters, I think if the market and the economy performs well, we are still going to get a lot of inflows from retail investors.
Yeah, but that's a big if, right? As the economy starts to improve, as the job market starts to get better, etc. Because right now, everything which has improved largely has been, the factors have not been internal. They've been, I mean, outside, which is oil prices. I mean, they have nothing to do with what the government here does, other commodities which have softened, right?
Yeah, it also depends on what competing investment opportunity does a retail have. They used to invest a lot of money in say bonds also, but now and FDs also. Now those interest rates have also started coming down. So that has not been, now it has lost little bit its attractiveness against equity. Also the real estate prices have started stagnating and it is quite unaffordable for a lot of people. Even the gold has not now started, it's not performing and it is like stagnating, in fact giving negative returns. So the other opportunities are also going away and therefore people will be more encouraged towards equities.
You were telling me that at Tata Investments, you were very active buyers, but you tend to buy when market conditions are extremely depressed because you have the capacity to hold on for a longer period of time. And you did that over the last 2 years or so, right? Last 1 year.
Correct.
More specifically. But now you're not doing very much, right? I mean, in terms of buying, very sporadic and in small quantities.
Yeah, we keep buying whatever stocks or sectors which we may like, but we, as a generally how we perform is that we generally buy more during bad times. We buy into good companies, good managements which are available at decent valuations, or which would give us good returns over the medium to long term. And that is how we perform compared to like most of the others, like a mutual fund or a hedge fund. They will perform more, they will behave more with positive markets and they will buy into momentum. But generally we don't buy into momentum. We buy more into depressed condition, but we buy quality stocks and good managements at that point of time.
But can I say that most of the focus, Mehrab, is still towards companies which are export oriented?
Yes, that has been one of the focus. However, if you see going forward, the rupee benefit which they had got, that may not happen. If you see, even one of the reasons for this quarter's earnings being down is that the rupee depreciation benefit has not come in, which was there 1 year back. So even if you see a lot of the IT companies over the past couple of years, almost 35% of the earnings was just because of the rupee depreciation. So that may not happen going forward. So yes, we are still positive, but we have to be slightly cautious.
What about the domestic, plays on growth reviving? Things like Larsen, and are there many there, Mehrab, which you're looking at buying? Banking, for example, many believe. What's your sense?
Yeah, we continue to remain positive on private banks. I think they have done very well. They have managed the interest rate cycle very well. Their net interest margins are stable. CASA has been good and improving. And also the most important thing, their asset quality has been very good and their capital requirements are reasonable. So yes, we are still positive over there. No doubt the prices have slightly gone up and they are almost fully valued. But still, I think the growth remains. Today also, if you see the credit offtake is less than 14%. So once that improves, I think they will do quite good. They have been capturing a lot of the market share from PSU banks and even regional banks. So I think they are very well poised, and particularly with good amount of capital, they are poised for growth. As far as if you see the PSU banks, there I think still there are at least for next 2 to 3 quarters, I think still there are the problems of NPAs and stress assets. This quarter, if you see a lot of PSU banks reported higher NPA and stress asset number, because what they were qualifying as stress assets 1 year back and hoping that the economy will improve and they will become good is actually not still happening on the ground, and that may take 2 to 3 quarters more, and that's why the NPAs have gone up. The margins are also under pressure. They are losing on CASA also, and the most important thing, they are all starving for capital. So that's why the growth will also be affected, and if they are raising capital at below book value, then again it becomes negative for the EPS and the shareholders.
Yeah. So banks and that's the private banks is the only sector from the domestic side which you're bullish on.
I think
right
autos
now.
Also will be one more sector which would be bullish. I think generally whenever the economy improves, I think in the first cycle always it's the private banks and it's the autos which do good. If you see the recent car sale numbers were not so good during the festive season, but our overall I think the growth have been good. There is a good turnaround even in the CV cycle is now turning around, which we are seeing in the results of certain companies. Also the two-wheeler sector has been doing quite good over the past few quarters, and we expect it to do further good. So autos is one more sector where we would be positive.
Two-wheelers and four-wheelers both?
Yes, two-wheeler, four-wheelers, and even on the domestic CV side.
Anything else from the domestic space?
I think cement would be another sector where we would continue to remain positive. Among the domestic cyclicals, I think they have a lot of pricing power. Even during the bad times, they used to have pricing power, and now I think the capacity is also increasing. Only we have to be slightly cautious because a lot of the large cap cement stocks are quite highly valued. So we have to be slightly cautious which stock we buy. But overall, I think the demand environment and the recovery will happen first in that sector.
Okay, got that. Thanks very much, Mehrab. Great talking to you. Appreciate you dropping by.
Thank
today.
you.
Thank you.
Thank you.
Let's take a quick break. So when we return, I think Raghuram Rajan would be speaking at that conference which is happening today at the NABARD headquarters in BKC. We'll cut across to that, and of course, the focus on markets will continue. We're back in 2.